What do you make of that? Do you suppose that sudden departure was intended to be funny? Come, don't sit there gawking. Let's go upstairs. Have you got the key?
Yes, Miss Van Hopper.
I remember when I was younger, there was a well-known writer who used to dart down the back way whenever he saw me coming. I suppose he was in love with me and wasn't quite sure of himself. Well, c'est la vie.
If you love listening to this show, please consider giving a rating and a review on Amazon Alexa or wherever you listen. We want to continue bringing you this amazing content, and part of our ability to do that means that we need a big audience. Now, it may not seem like much, but rating and reviewing the show will help more people find us, just like how you found this show. Simply on any podcast platform, search for a show, scroll down to the bottom, and push 5 stars. It's that easy. Thanks for supporting the show. Today I'm joined by Dylan Taylor, who is the chairman and CEO of Voyager Space Holdings. Welcome to the show today.
Thank you, Scott. Great to be here.
All right. Well, also concurrently, we are broadcasting on Clubhouse as well. So for those that are joining, don't forget to scroll up and hit that Monopoly House icon to join Astor Perkins Club, and also go down to the bottom, hit the plus sign to invite others to the conversation. All right. So Dylan, in your past, you were a director for UMB Bank as well as a mutual fund director for the Jackson Funds, where you oversaw some $8 billion across 130 distinct funds. And of course, you even have 4 IPOs under your belt as well. Can you tell us a little bit more about your past experience?
Yeah, sure. I mean, I guess I grew up in the public markets is probably the easiest way to describe it, Scott. Started in the electronics industry. That was the first industry that I was involved in. And just very fortunate, had some great mentors, some great luck, frankly, and got promoted several times, ended up living in Europe, participating in an IPO in my 20s, actually, which was pretty eye-opening. And really at that point in time, I guess that would have been the late 90s. If you had global business experience and public market experience, you were pretty high demand. So did financial services, did real estate as an industry, and just cut my teeth on basically running or supervising at the board level multinational companies. That was really my track record. And then of course, lifelong space, passionate space nut, for lack of a better word. Found my way to the space industry really as an early stage investor initially. And then now, of course, am in the industry full time running Voyager.
So I'm curious because you mentioned that you have been a lifetime enthusiast of space. When you were in fund management and some of these finance capacity, was there a point in time when you thought, gosh, I've done that, but I really want to be able to shift my focus to space? When was that kind of aha moment for you, and what was the impetus?
Yes, so I thought about that all the time. It was probably, and I think I might have told this story once before to you, Scott, but I was at the World Economic Forum at Davos, the annual meeting. This was probably 2007, and a friend of mine, still a friend to this day, Eric Anderson, and I got to know each other over there. Eric, as you may know, was the founder or is the founder of Space Adventures, which is the firm that has sent tourists to the International Space Station. And, shared with him my passion for space, and we commiserated over that. And at that time I said, well, how do I get plugged in? How can I get more involved? And at that time he had a initiative he had formed to focus on early stage investment, basically angel capital for the industry. And that's initially how I got involved. So it was really, I think I was at the point in my career where I was just, and I think hopefully other people could relate to this. You have some success, but you aren't really feeling purposeful. You're not really feeling satisfied. And that's sort of where I was at. And space to me was always this big idea that was, larger than yourself, larger than, base case humanity, if you will. was like the next big thing, and that really energized me.
Absolutely. I think that's very much the case for many of us who are tracking and investing into space. You've personally made some 50 investments or so in this category and other categories. What are some of the things that you look for in a startup?
Yeah, well, 50. I think it's like 60 now, which probably just means I can't say no, Scott. I'm probably an easy yes. That's probably all it says. But for me, I think it is a cliche, but it really is the team. Especially in space, you have a lot of very smart people. You have a lot of business plans, a lot of great ideas. But at the end of the day, ideas are a dime a dozen. It's really about the team. Can they execute? Can they, as you know, Scott, no business plans ever implemented as drafted ever. So, are you resilient? Can you pivot? Can you dust yourself back off after hitting a brick wall and, get back in the game? And so I think it really is team. And then, of course, in space, the technical is important, right? If it's defying, the second law of thermodynamics or something silly like that, then obviously you shy away. And there are business plans that cross my desk frequently that just, if you have just a little bit of engineering knowledge, they're not feasible. And by the way, there are large companies that have been capitalized in this industry with tech that doesn't work. So there are investors out there that are clearly not doing technical due diligence at the level they need to.
Very interesting. So, which brings us to what is Voyager Space Holdings and what's your vision for the company?
Yeah, so our vision is to be the best space exploration company in the world, full stop. So we see the industry as kind of a tale of two extremes. One extreme is highly capable, very large companies, typically embedded within defense contractors, and then highly innovative, highly entrepreneurial, kind of fail fast, Silicon Valley modeled new space companies. What's interesting to me is the companies that have the ambition to do really, really cool things in space typically don't have the capability to do it. And the companies that are at the very top who have the capability aren't particularly ambitious. And it's not because the people that work there are that way. It's because they're very institutionalized large companies, and they're essentially not going to get too far out in front of their customers. And so, going to Venus or Mars, unless someone's going to pay them to do that, they're not going to do that. So the visionary part of the industry is still relatively small. And so Voyager is really meant to harness that and scale that new space phenomenon and put it in a professional, publicly traded operating company that then becomes a safe choice, right? Famously, people, say no one ever got fired for hiring IBM. I don't know if you've heard that phrase. It's a pretty common phrase. It's similar in space, right? If you're a large, credible prime contractor, you're a safe choice. And, typically the new space companies are a bit renegade. Well, imagine harnessing that new space capability, but having it in a, flying in formation within a larger, safer, well-capitalized, publicly traded company. That's really what Voyager is attempting to do.
I think there's a kind of interesting consideration, and I think it goes back to what you said about people, and I think you were essentially also implying culture as well, which is that, when we look at the aerospace and defense primes, the tier ones, if you look at kind of the past history, let's say, they were, clearly innovative at some point before maybe they became a little bit too big. So how do you ensure from a culture that, your new organization doesn't face a similar, path forward in the sense that right now, clearly you guys are all about innovation, but let's say 30 years later, when you guys are large and you have, integrated, let's say hundreds, if not thousands of companies, and you are at the scale, if not greater than the large primes, how do you still stay nimble and versatile?
Right.
You may also like our quarterly Astro Perkins event that brings some of the most notable experts and category leading startups in their area of sustainability and human survival on Earth and in space. To register, visit astroperkins.com/events.
I think that's a brilliant question, right? And that's the difficult part. So I think there's a couple of ways to mitigate that. One is what we're centralizing is typically the non-innovative part. So all the business infrastructure layer, finance, accounting, engineering, testing, mission control, things that scale well with size. And then on the front office side, business development, public policy, these things that are really tip of the spear type capabilities. At the operating layer, we really want to be very light touch, right? Because that's where you get the brilliance. That's where you get the entrepreneurial spirit. So day-to-day decisions, what to work on, how to innovate, how to solve problems, who to hire, who to fire, all of that is completely up to the operators. And I think if you ever try to centralize that is when you start, changing the company from this entrepreneurial base to more of a centralized base. So I think that's key. Also, the people you bring in are key, right? The companies we're acquiring are highly innovative entrepreneurial companies that are saying, look, we're successful. We want to get to the next level. We're not really sure how to do it. And we want to be part of something bigger. If, however, it's a company and there's lots of them who say, hey, I've built something special here. I want to ring the bell, cash out and go retire. Well, that's great. That's a transaction someone else should be doing, but that's not a deal that Voyager would do, right? So I think it's very critical that you bring in entrepreneurs who, if you try to centralize their thinking and try to rein them in, they're going to push back very, very hard, right? I think that's a good thing. That's what you want. So those are some of the mitigating factors. There are other equity incentive plans we put in place that really incent the operators to focus on innovation. So we try to solve it with compensation as well.
So for those that are listening, I'm curious because they're probably thinking in their minds, there's a kind of a wide spectrum, right? So you have VCs that are, involved at the board level and oftentimes will actively replace, install new CXOs. And then you have, folks like Jeff Bezos, but more like, let's say, Tesla's founder, Elon Musk, who manages really a holding group of companies, but in many times plays both kind of a visionary, but also some cases operational as well. Mm-hmm. And then the other far spectrum are people like Warren Buffett, who plays a very passive role and looks to the management team to continue to do well in the specialty that they're in. So how do we kind of recognize or reconcile, I should say, the kind of culture or the DNA that you guys are looking to build?
Yeah, it's a great question. I see Warren Buffett and Berkshire Hathaway, which it's hard not to admire them, right? Their track record's amazing. I see them as financial investors, right? So they don't really care on the industry. They probably care on the team, but it's really more what are the characteristics of the actual asset and the cash flows. Elon's exact opposite, right? He's deeply operating his businesses and making design level decisions. We're not doing that. I like the model, if you're familiar with Danaher or Heiko, those would be two that I would point to, which are business process companies. So they have a toolkit, they have a way of approaching business. They're adding value and accelerating these businesses as they acquire them, but they're operating them, but they're not operating them in such a hard and fast centralized way that they're killing the golden goose, if you will. And the reason it's important too, Scott, I should have mentioned this earlier. So why does this model matter? Well, the premise is whoever has the best people has the best company, right? Part of the reason SpaceX is leapfrogged everybody is they're getting 10,000 applications a month to work there, or whatever the number is. So if you create a model where the best people in the industry want to work at that company, over time, you're going to accrue the most talent. And if you have the most talent, you have the best company, right? It's really that simple. And we think the best people in the industry they don't want to be a badged employee at a large prime. They don't necessarily want to be entrepreneurs solely because the business of business is not something they're really in love with, right? They love to innovate. They love to lean into being that entrepreneurial spirit. So they can have their cake and eat it too under a Voyager model. And that's resonating with a lot of the best leaders and entrepreneurs in the industry. And And I think over time, as that talent accrues to our platform, we'll overtake, a lot of companies that maybe don't have the same approach.
Well, I think it's a really interesting approach that you guys are taking. And I wonder if, in fact, the model that Voyager is taking is in some ways kind of self-selecting the entrepreneurs that choose to come into that ecosystem. So in other words, there may be space startups that they see themselves as being hardened, independent, and they see a path forward, whether it's as a publicly traded company or as a private entity, again, just being very much independent. But then there are those that just kind of culturally and from a, from a kind of best practices fit in with what you're looking to do. And I wonder that kind of self-selection process, if you are in fact getting the best of the best, or there are some groups of startups or entrepreneurs that you can't quite reach.
Right. Yeah, probably. I mean, I think there are entrepreneurs who I think want to perhaps go it alone. They want to, we talk to people all the time. It's like, well, we're considering doing this, or we're considering selling to a SPAC. And I'm like, okay, well, that's interesting. Have you ever worked at a public company? Have you ever run a public company? Do you understand what it means to be a public company? Those kinds of questions. And you realize that they haven't really thought through that. But some people just had that level of ambition, right? And they want to run their own show, and that's fine. But I again, I don't think the industry is big enough for lots and lots of different models to work. And I for one, would not be one that would say the Voyager model is the only way to build a successful company. But I do think this issue of scale in the industry is a problem. The industry is not scaled well. And so in reflecting on why that's the case, private equity, it's a tough industry for private equity to scale. It really is, because it really is an operator's dilemma and not a financial engineering dilemma. So I think this model has a lot of room and a lot of traction, and I expect it to be very successful. It has been successful, and I expect it to continue to be.
And for those listeners that are not as familiar with the space economy, can you give us a kind of a 50,000-foot perspective around where we are and some of the challenges or gaps that you're referring to that we need to overcome as an industry to mature?
Mm-hmm. Yeah, I think it's a renaissance for sure. We are hitting the hockey stick for growth in the industry, and the reason for that is we've built the elevator. So credit Elon and SpaceX. Rocket reusability was a dream for years, and we've now solved that. So we now have inexpensive, reliable, reusable launch. And what that's done is it's opened up many, 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 many business plans that previously didn't close. And we're putting much more hardware in space, and there's tons of capital flowing to the industry. So that's all great. Where we need some additional maturity is we don't have a lot of publicly traded companies. We don't have a lot of exits. We're working on that via SPAC and traditional IPO. And we're also not, in my mind, as I said, doing a particularly good job of creating mid-market firms, right? We have lots of small innovative companies and lots of, well, not lots, but a few very large primes, and not a lot of companies in between. And typically, most industries, that's not a stable state. Typically, you get some kind of a disruptive phenomenon, and then those smaller companies aggregate and consolidate. They become the new primes, and then the cycle repeats itself, right? It's funny, Scott. People are like, Dylan, you wrote an article 5 years ago talking about this all happening. How did you know that was going to happen? I said, well, the only thing that's surprising to me is that people are surprised, because all industries play out this way, right? It's a very predictable life cycle. So it surprises me that people don't see it. But I wrote an article for SpaceNews called Diners and Dinners. You're either a dinner, right, on someone's plate, or you're the diner consuming the meal. And I wrote that 5 years ago, and it's pretty much played out exactly the way I wrote it.
So I wonder, looking at it from an investor perspective, and again, I'm talking about other investors that are thinking about space, how should they think about the opportunity that's in front of them? And also, what type of investors are actually the right investors for space?
Don't forget to visit astroprickens.com to register for our next quarterly events. Past and current speakers include Julianne Hough, actress, dancer, and winner of Dancing with the Stars, Damian Vaughn, former NFL player, Neil Gregory, Chief Thought Leadership Officer at the IFC World Bank, and many more. To register, visit astroprickens.com and click on Events.
Well, I think I'll start with the second question first. I think unless you're a retail investor buying publicly traded Virgin Galactic or soon to be public companies, I think you need to be patient and long term. A lot of the returns in space are back end loaded. So if you're very sensitive to IRR and you're very sensitive to short term cash flows coming back, space is probably not a great area for you to invest in. Secondly, diversify yourself. I talk to people all the time who say, well, I'm going to do a few angel investments in space. I'm like, that's the dumbest idea I've ever heard, because no one that I know that I've met is smart enough to pick individual winners and losers in any industry, much less space, right? It's way too difficult, way too difficult. So you want to have a portfolio approach like 8 or 9 or 10. The irony is if you do that, it becomes actually very low risk, because the industry is so exponential right now that you're almost assured to get a winner in there. And when I say winner, I'm talking about like a 30x or a 40x winner. So diversify yourself, find a good mentor, partner with people that are well known in the industry. I always insist on investing with pro rata rights. One of my philosophies for early stage investment is that the only way to really do well is you have to press your bets and double down on your winners. And to do that, you need pro rata rights. So I think that's another important consideration as well.
Very good insights. Appreciate that. Now, when we talk about the space economy, it's fairly broad. And I think many people, of course, they look to the launch side, but there's a lot more to that. So when you think about space as this, burgeoning, growing, yet to be defined industry, what are the areas that you're most excited about and why?
A couple. So near term, I really like the low Earth orbit economy, right? So that's where most of the satellites live. That's where the International Space Station lives. But that is becoming essentially a commercial district. And so as that, you're going to need refueling capabilities. What we call orbital servicing capabilities. So robots that can go travel around low Earth orbit, attach to other hardware, manipulate it, refuel it, upgrade it, deorbit it, those kinds of things. So I'm really excited about that. I'm also excited about if the last 10 years of the industry was about building access to space, I think the next 10 years will be about destinations in space. So where are you going to actually go? And I think there'll be a renaissance of private space station construction. I think we'll have a dozen of those in the next 10 years. So I'm excited about that. And then last but not least, this cislunar economy. That's the economy between low Earth orbit, geosynchronous orbit, and the moon. And there's a lot happening there to lay some infrastructure, because as we return to the moon, as we press deeper into deep space, there's a lot of infrastructure that we need out there. Right? I mean, one simple example is position, navigation, and timing. GPS looks down towards the Earth, right? It doesn't look the other direction. So how do you navigate? How do you transmit power? How do you communicate in deep space? All these kinds of infrastructure issues need to be solved. So I'm super excited about that. That's a little bit further down the road.
I think what's really exciting to hear, but I think for some investors they're thinking about is while they're I think fascinated by the prospects of space and the future, whether that's 10 or 20 years out, because many of the investors have been focusing on lighter things, whether it's SaaS or fintech or e-commerce or enterprise, they like the lower cost capex aspects, but the higher multiples. How do they think about investing into this category where potentially there's not only a longer time horizon, but there's a higher capex, but yet to your point, on the back end, because we're building entirely new infrastructure, entirely new ecosystem, To me, it's essentially almost like the first industrial revolution all over again, and we're going to birth the Rockefellers and the Carnegies. So how should they be thinking about kind of, what they're comfortable versus what they should be thinking about and looking at it from a different perspective?
Right. It's a great question. You can invest in high capex businesses that provide liquidity. So if it's a publicly traded company, certainly you would have the ability yourself to have some near-term liquidity. One of the things the industry needs to do, Scott, is more standards, industry standards. Part of the reason that capex is so high is we keep on reinventing the wheel with a lot of these components and infrastructure layers. So I think we as an industry need to work on that. But then I also just think investors need to be, you can't have your cake and eat it too, right? You can't have mega returns and completely capex-less investment, right? That just doesn't exist, at least not in the world today as I understand it. So I think, and by the way, there are capex-light investments in space. So again, back to portfolio theory, maybe you have a couple of heavy, capex bets where everything is back-end loaded, and several bets that are more capitally efficient. That's probably the best way to play it. But with some of these SPACs that have transpired recently, those SPACs are well suited, as you know, Scott, where the capex is high, the growth is huge, and returns are back-end loaded. Well, that's a lot of what we see in space, especially in the launch market. So I would expect that, we've already had a few SPACs in space. I would expect to see a few more as well.
All right. So I do have a couple of questions, but I'm just going to give some of those that are joining on the Clubhouse an opportunity to ask questions. Just a quick reset for those that are on the Clubhouse. This is your host, Scott Amyx. And don't forget to scroll up and hit the Monopoly House icon to join the Astro Perkins Club. And then also go down to the bottom and hit the plus sign to invite others to this conversation. So if you have questions or comments, please feel free to raise your hand and we'll bring you up onto the stage. In the meantime, we'll go ahead and continue the conversation here. Okay, so you mentioned that you guys have filed for IPO and that you guys are expected to go into the market later this summer. As a publicly traded company, what do you hope to accomplish in the near future?
Yeah, and just to clarify, we have not filed our S1, Scott, but it's our intention to do that later this year. I like the permanent capital nature of public market companies. So to me, the permanent capital structure is paramount. I also like the idea of being able to use your currency in acquisitions. We're an acquisitive company. That's really our structure. So that serves us well as well. And then lastly, there's massive retail demand for space, as I know. I mean, Kathy Woods came out with a space ETF this week, which I thought was amusing because she had, I think, Netflix in there and John Deere and some others. Well, I think it's just because there's not other great choices for her to add. So for all those reasons and more, I think it's an important step for our industry. And I also would like to do it the old-fashioned way. SPACs are a thing. And of course, we have to return all phone calls. We're fiduciaries. We have shareholders. We've got to listen to everybody who calls. But in general, I think it's important that, I tell our team, getting public is the easy part. The difficult part is being a well-run, well-traded, well-supported public company. Those are two different things. So I think it's important to have a very strong foundation.
Fantastic. And again, you have I think decades of experience in that arena. So I think we have high confidence. You mentioned Kathy Wood with ARK Invest, and of course, there are others that are also very much getting into emerging frontier tech as well on the secondary market side. And I wonder how those movements and new capital that's flowing into these deep tech sectors, how that's going to actually help facilitate some of the some of the gaps that you mentioned before in terms of kind of that middle market being missing, but also as we get retail investors and more people interested, aware, and educated in this area, how does that actually enlarge and help strengthen this growing economy?
Yeah, well, it's a really thoughtful question. The answer is a bit nuanced. So retail demand matters because it's real dollars, of course. But when you think about why space or how space is funded, the politics of space, both at the Department of Defense and NASA, it all is based upon political support, which is all based upon what the people tell their congresspeople they want, right? Priorities. So the more, the Apollo program, of course, that was JFK, planting a flag saying we're going to do this. And there was a lot of alignment around that. So I think the more excitement we have around retail space, I'm passionate about space tourism. Scott, you and I have talked about that in the past. Part of the reason I'm passionate about it is as people, see new astronauts minted daily and they know people who are going to space, I think excitement will build and general support for space will build. And so I think it'll unlock more spending for space. That's part of the reason why I think retail is really important. And I think, again, people will realize that really, I've said this before, everyone's in the space industry. They just don't know it yet, right? Every industry will be disrupted by space. Bank of America, their latest research report on space said this is the disruptor of all disruptors. And I agree with them. So I think that's an important point.
All right. So I think we have maybe in a previous conversation talked about this, but space also has another very important paramount reason why we need to have a leadership role. We talked a little bit about the capital market side, but from a defense, both from an interest of the United States as well as our NATO allies, why is space such an important frontier that we must have leadership in?
Well, it's the ultimate high ground, right? I mean, you can't get higher than space. And there are real assets that we have in space that have to be protected. I mean, GPS being the most obvious one. If GPS goes down, the financial markets go down, right? All our precision clock timing is based upon GPS. All our business models, pretty much everything in Silicon Valley is based on GPS. So I think it's a really important consideration to make sure the infrastructure is protected, that adversaries can't take that infrastructure out. So those are just some highlights. Now, ideally, you would not militarize space. Ideally, space would be this blank canvas that we can kind of reimagine humanity 2.0 on, and it'd be this altruistic, benevolent place. And that's certainly my dream. But there are real risks in the world, and you can't be naive about them.
My last question for you is, we talked about some opportunities that you're excited about, low orbit, but also aside from the space stations, the private space stations that's about to come up, is this distance from where the current satellites are to the moon and the infrastructure that's needed to support everything from cloud, communication, energy, power, and eventually the terraforming on the moon itself. Why is having a strong foothold on the moon so important, as other state actors are looking to, really, even though it's not meant to be militarized, that they're looking to use it for that purpose as well?
Yeah. Well, the moon has real resources, right? There are rare earth minerals on the moon. You can do a lot of science on the moon that you can't, it's essentially a floating space station, really is what the moon is, right? So there are a lot of strategic considerations there. It's also a beachhead. If you want to go deeper into space, building infrastructure on the moon makes a lot of sense. And national pride. I mean, I know China, I don't know much about their declarations publicly, but it seems to me going to the dark side of the moon was all about the fact that no one had really been there before, right? And they could say, well, look, we've done a first. And there's a lot of national pride with that. Israel tried to do a moon mission last year, and they almost pulled it off, which is just unbelievable when you think about it. So I expect more of that, a lot of national sovereignty, a lot of national pride.
Amazing. All right, let's see if there's any questions from Clubhouse. If you have questions for Dylan, please go ahead and raise your hand.
Good, and I will have to cut here in a second as well for another appointment.
All right, so Thomas, go ahead and ask your question.
Hey, how's it going? Can you hear me?
Yes. Hi, Thomas.
Hi, how's it going? I'm a software engineer, but working on a side project with some my colleges and developers right now to grow different types and strings of mycelium for different applications. My question is, yes, it's kind of like a new frontier, but it's also not. There's other companies that have been established for a few years, maybe even. I mean, NASA's also doing research on it. So my question is kind of around the idea of what would be your advice for someone who is, or a startup that is entering a sector that's, or it's entering, a type of technology that's new, and kind of the front line is within, eyesight of where we are, but we're not even close to, well, we're that makes it sound bad. We've got some really great stuff going on, but we're not up to par with where the other companies that have already entered this industry are. So I was wondering if you had advice on approaches to take to get up to that front line of research for this sort of application of developing materials from mycelium, and once we get there, how to focus on becoming unique and individual.
Right. Okay. Well, good question. I don't know a ton about mycelium, but what I would say is, in general, it sounds like this is more of a microgravity play, right? If I'm understanding the question correctly. So, I think there's a couple things. One is, is the IP protected? So is there an IP carve out? Is there an area of that, sub-industry, if you will, that you and your team could attack that no one else has figured out? Because even if you're not the market leader within that subsector, if you can solve a really important problem, then you can either leapfrog somebody, or you can throw your lot in with them and say, look, we're bringing to the table an important solution to a problem that you haven't yet solved. So sometimes less is more when you're trying to catch up. And if there's a particular problem in the industry that no one has been able to solve, hyper focus on that could be an answer. The other is the complete opposite of that, which is, okay, forget about the tech and forget about development. Who's the end customer? How do we create a new model around this to monetize? Famously, all of Silicon Valley turned upside down with, software as a service model. It wasn't that the software was better. In fact, the software was worse, right? Because you were putting out MVP, but you had inverted the model and you turned it into something that was, a completely different way to buy the service. So that was an innovation around delivery and not an innovation around product. So those would be just two general thoughts I'd have for you.
All right, terrific. Well, we are a little bit out of time here. So Dylan, thank you for joining. So we've been joined by Dylan Taylor, Chairman and CEO of Voyager Space Holdings. Thank you again.
Bye.
If you've enjoyed this episode, take a moment to rate our show on any podcast platform that you listen to. Scroll down to the bottom and push 5 stars. It's that easy. And as always, thanks for listening.